Hello traders, investors, and crypto enthusiasts. Welcome to our channel where we bring you deep analysis, breaking news, and reliable projections about the blockchain universe, Web3, and digital currency trends. Today we're discussing a major surprise. DeFi Development Corp, DFDV, a Nasdaq-listed company, announced a historic deal this Thursday, 12th. A $5 billion credit line with asset manager RK Capital Management. This marks the largest purchase volume since the company became a Solana Treasury, representing a new chapter in traditional markets' relationship with digital assets. The news triggered an 18% pre-market jump in DFDV shares, now trading at 31, and boosted optimism around Solana SOL, which rose over 7% in the last 24 hours. But what's behind this movement? Let's explore the details. DeFi Development Corp. As transformation from Javener to Solana Treasury. Before April 2024, DeFi Development Corp was known as Javener, a commercial real estate company. Everything changed when a group of Kraken executives, including current CEO Joseph Onorati, took control and redesigned its strategy. By mid-April, DFDV announced its conversion to a Solana Treasury inspired by MicroStrategy, its Bitcoin approach, but specifically focused on Solana blockchain. Since then, the company has made 11 SOL purchases, accumulating 609,000 tokens worth $97 million at current prices. Additionally, DFDV operates its own Solana validators, generating passive yield for shareholders through staking rewards. The result? A 4,000% stock surge in just 2 months, per Google Finance, making DFDV one of the market's most volatile and watched assets. The $5 billion deal, how it works. The RK Capital agreement allows DFDV to sell up to 5 BAs in shares to the asset manager, which will act as buyer of last resort. In return, the company commits to reinvesting proceeds exclusively in Solana, potentially increasing its SOL exposure by over 31 million tokens at current $160 price. This equity line of credit, ELOC model, is common in traditional markets, but rare for crypto-adopting companies. The benefit for DFDV is clear: capital access without excessive share dilution, as RK Capital only purchases shares when funds are requested. CEO Joseph Onorati stated the credit line will increase SOL per share and accelerate validator compound growth, reinforcing the long-term strategy. Why Solana? The Solana choice isn't random. The blockchain, known for high-speed transactions, 65,000 TPS, and low fees, has attracted developers and institutional capital. Projects like Jupiter Exchange, Pyth Network, and Solend have strengthened the ecosystem, while partnerships with Visa and Google Cloud expanded its reach. Solana also benefits from positive news flow, approved staking ETFs in Europe, and Layer 2 solutions like Solaxi SOLX, addressing scalability. For DFDV, betting on SOL means backing infrastructure that could directly compete with Ethereum and Bitcoin. Regulatory challenges, the SEC shadow. Despite optimism, DFDV faces hurdles. Recently, it withdrew a 1B public stock offering for SOL purchases after SEC pushback regarding digital asset disclosure rules. The company will now file an S1 form detailing its crypto strategy to ensure transparency. The new RK Capital credit line expects to comply with the same guidelines. Market implications. A Nasdaq company entering Solana's ecosystem is significant. Traditionally, crypto investments were limited to VC funds or specialized startups. Now, traditional corporations are using established financial structures like ELO keys to integrate blockchain into their balance sheets. This could pave the way for other listed companies like Apple or Tesla exploring digital asset diversification. It also reinforces that blockchains like Solana are maturing and gaining institutional acceptance. Where's the opportunity? DFDV offers indirect exposure to Solana's potential, combining token appreciation with a transforming company's upside. However, consider regulatory risk. SEC policy changes could negatively impact crypto-linked stocks' volatility. Direct SOL exposure subjects DFDV to sharp price fluctuations. Governance: the team's limited blockchain experience may create execution uncertainty. Conversely, if Solana reaches $190 to $200, as technical analyses suggest, DFDV's SOL holdings could exceed $1 billion, potentially driving shares above $100. Final thoughts: DeFi Development Corp sits at the center of a quiet revolution, Wall Street and crypto convergence. Its Solana bet could be visionary, but depends on unpredictable macroeconomic and regulatory factors. Will Solana sustain this rally? Is DFDV an opportunity or risk? Share your thoughts in the comments. Don't forget to subscribe for real-time updates and join our live deep dives into blockchain charts, news, and trends. Until next analysis, may the market be fair to your trades. This translation maintains the original's analytical tone while adapting it for an international crypto audience with proper financial terminology and natural English flow. Let me know if you'd like any refinements.